one thing Friday's report kind of slapped us in the face was USDA added to their fourth quarter expectations for beef production. And I'll say it's up about 3%. This was a little surprise, but really looking at this chart, it shouldn't have been. The last 3 to 5 weeks, we've been seeing beef production and cattle slaughter running about 5%, if not a little more, over last year. So we do have some extra numbers showing up here, which the trade was not expecting. In general, we can point to this as far as today's rally, pretty much all related to the China issue here being one primary issue right now. For seasonal, one thing I want to point out is we do have a little drop in slaughter, which happens at this time of year, and then we have looking forward to a few weeks ahead of generally lighter slaughters before a big increase comes in for summer. So just want to point out that for the short term, we're going to move from a pretty well-supplied time period into the spring and summer, or early spring, which is generally a lighter supply issue here. At the exact same time, we have some demand come in here. So we have some hopes right now for long-term issues on U.S. consumer demand, those type of issues. The fact that the consumer confidence report from last week showed we're at levels seen before the recession. So that's one thing where we're still keeping a very bullish viewpoint here on the cattle. We still would not work on any sales on the cattle until maybe April. It hits 110 again, those type of levels, which I don't expect here until maybe February or so. Over on the hog side, one thing we can point out here is we had about 4 to 5 weeks now of very stable 1% higher slaughter numbers. And judging by that last quarterly hogs and pigs report, we should be just around 2% lower than last year. So all we're doing right now is we're evening out this large deficit in numbers. Now we're having a little higher than we should numbers. It's kind of balancing that out here. So the point I want to make on the supply end is no change yet on the supplies here just yet. One thing we have had in the past 2 weeks is a nice little rally here for cash hog prices. That's shown by the red line right here. And that actually almost happens in the first half of December. And this one thing we can look at right now is we have some type of weather issues, which the trade was a little concerned about. We talked about the report for a few nights in a row. With the weather issues out, now we have 2 weeks in a row of reduced slaughter. So Christmas and also New Year's Eve week. That puts the power back in packers' hands. So we should see a slight drop back down in cash hog prices, just like we've seen in the past 3 years. So don't be surprised to see a little break in cash hog prices for the near term. It shouldn't impact the futures here too much. Reason why I'm not going to get too bearish on the futures right now, we've got not only the China issue here, and China is a buyer of U.S. pork, so that's certainly helpful. Second issue here is with corn. The fact that corn hit new highs now for the uptrend, that's going to restart some of these livestock guys getting a little concerned about corn prices. So generally corn and hog kind of go together here for a few weeks at a time. I think that will take back hold again.